What are you doing? Oh, really? That's what you think about stock market right now. You have to invest, he says. How much? Little bit? Lot of bit. Yeah, a lot of it. Okay, fair enough. Alright. Today, my husky has come in to help me make a video on the one stock you have to own. So I think it's actually quite stupid, in my opinion, to not own this. I see a lot of people with this COVID lockdown being not intelligent. It sounds like they were silly beforehand. But I think the general population of the world understands that 2008 brought with it a huge amount of potential. Market for the houses come down. There was many millionaires made by investing in stocks, investing in property, and it's all boomed. And it's been since then that we've had a major recession like this one, and I think everyone has that in mind and is being very smart in the way that they're going about looking at stocks, wanting to get involved. But the one thing I do see a lot of is, I'm thinking about getting a stock market. Should I buy Carnival? Should I buy plane stocks? Should I buy Virgin Airlines, bloody Tiger Airlines, all this stuff? And the idea is there that they understand that the pricing of a business can dip, and then as it gains traction, grows again. And the train of thought, I do commend it, is pretty like I've even considered like, oh, cruise lines could probably still do pretty good. But the problem is they're in such a rut that they're taking out these big loans, they're getting paid out by businesses and things like that. Influences it a lot, makes it a bit risky. Because how do we know they don't just shut the door completely? How do we know that they're going to bounce back to the point where they were? How long is it going to take? Hey, watch out for the... And all these things. So there's particular stocks, and I'm going to give you examples, and I invest myself in an index fund, and that's the whole point of it. Now, an index fund is a collective of businesses which diversifies your portfolio without you doing anything. And you probably hear that mentioned a lot. Warren Buffett says so, and he's built an $80 billion empire, 70 or wherever it is. It's a lot of billions from trading, and recommends advice like this. Yes, we are sitting on the racing simulator today because I wanted to be at the computer when I make this video. So I'm going to give you a couple different options. I believe it's four in this video, of one single ticker symbol stock that you purchase, and the whole business that you're buying into there, such as Vanguard and well-known ones like this, which I will give you, like I said, examples and recommendations. Their whole philosophy or their whole business model is they buy sections of these other businesses in a specific order. So you could buy technology focused index fund. You can buy, whatever. You can buy ones that follow the S&P 500 the best, which demonstrates the kind of strength of the whole market and things like that. And they're some of the most safest things you can make. Some of the safest investments you can make. I think it is silly to not have an index fund within your portfolio, because it literally is the market in a sense. For it to lose money, something terrible would have to happen. The whole of America would have to sink into the ocean and never be seen again for the market to have a huge issue. And if something like that happened, well, money's not going to really matter as much anymore, is it? Because the world's going to go into turmoil if any of these major things happen. So ever since, from factors like inflation and things like that, the market has always grown. The market has always grown. History shows. Does it mean that it always will? No, you always have to say in quotations that anything could happen. Okay? But at the end of the day, is it better than investing in a bank account and sitting there and getting no interest at all, or 1 or 2%? Yes, 100% it is. And that'll bring us across to my recommendations here. So an index fund that focuses around the S&P 500, super safe. The S&P 500 has always had growth. I mean, depending what term you're looking at, but in the long term, it always grows. And these particular ones are really strong contenders. So let's start off with my lesser recommendations and move in to my top picks. There'll be 4 total. So SPY is one that has seen a lot. And it is a big index fund that's seen a lot of decline since all this broke out. But is on the mend back to the strength where it once was. So we looked at a year, 5 years, you can see nice continuous growth. Now, SPY is a really good choice. You cannot really go wrong with it. One thing that I do keep in mind is I know that SPY is day traded and swing traded. more so than I think the other ones are, which means for any new investors, it might show a little bit of small fluctuations as people are buying and selling the stock, trying to get in and out within a day or within a week and make a small couple dollars here and there. But that takes so much effort. I don't recommend swing trading or day trading to anyone that is brand new. What you want to do is invest in one of these funds in an automatic debit type style. So every time you get paid, you never even saw the money. You just put a little bit in continuously into one of these index funds, because in the long term, it's always going to grow, and chances are they pay dividends, which you'll get. Or you can just, if they follow the DRIP system, dividend reinvestment plan, you can have them automatically reinvested back in. But for the one I use, an Australian one, I have to do it by hand. But either way, long-term growth is what we're looking for here. But nonetheless, SPY is a really good option. You can see that it has a 2% dividend yield here on the software. It's like a Robinhood, this one that I use, but for Australian, you can buy and trade and sell and things without fees for doing so. Unlike some systems that rip you off if you're trading through a bank or something. So, looking good. Looks like it's just about to have a bounce here. I'll wait for confirmation before you buy in, although you don't really try and time index funds. By the time you see this video, it'll probably be climbing back up, which makes it a really, really convenient time to buy. You can see it's been a bit rocky over the last month, especially 3 months, but when it gets back to its glory, which I'm sure it will, the whole market will, and we'll continue on our ways after this recession, then it'll be a super strong investment. And you can see over 3 years, it's kind of like the term that we're looking at. You want to really go long term with these to see the best growth. So SPY is the first one, and that will lead us on to VTI. So it's a Vanguard stock. Vanguard's the biggest provider of ETF or index funds. So another one they have is a total stock index market fund. You'll see same potential, about the same dividend yield, and just tracks the overall market a little bit more. So the more broad you go like this, I guess the more safety you have, but you'll probably see a little bit less growth, but still super, super strong potential there. See 15% over the 3 years. Actually, if we look back at where we were on the SPY, we can see over the 3 years, 17.5%. So still both super, super strong contenders. And it's just so safe. Like, I cannot recommend enough to people to have an index fund, build up that portfolio, and then you can look at individual stocks going forward. Moving on to number 3, we've only got 2 remaining. The first one I've actually heard about, the SWPPX S&P 500 index fund. New to me in my research I was doing for this video, but founded in 1997. SWPPX is the ticker symbol. Has turned in an average annual return of 8% since inception, and that's 1997. So that is through 2008 market crash and everything. So just goes to show how well these stocks can perform in the long term. So I'll add the information for that in the description below, but that leads us into the number one choice, the most proven one, and that's Vanguard S&P 500 EFT VOO. One of the most known, founded in 2010, right after the market crash, and once it come back to strength, had an average annual return of 16%, okay, which follows the S&P 500 really closely. And as you can see with VOO, 3-year return, and just like the others, it's up a little bit higher than the rest at 18%. And nice continuous growth. Right now in the recession, you've got a nice undervalued stock price, awesome time to get into it. And I really think it's silly to not have an index fund somewhere in your portfolio before you try and buy any of these other single off stocks. They're a bit more risky, and it's almost a bit more gambling when you come in trying to do single stock type trades. Thanks for watching, guys. Be sure to like it if you found any help at all within this video, because it shows the YouTube algorithm that it's somewhat helpful and it will do good things for the channel. And on that note, I've noticed 99% of everyone that watches my videos isn't subscribed. I've been watching that statistic really carefully because I'd like that to get higher. It's well under average. So if you think you would like to see any more content in the future, make sure you press subscribe, put that bell on, and we might see you on another video coming soon. Thanks for watching, guys. I'll see you next time.